I'm going to teach you the most important scalping secrets I've learned in the last 7 years that helped me become profitable. If it feels like every trade you take you lose, or you have small green streaks only to have one trade blow your entire account, it's because you've watched hundreds of videos showing you strategies and concepts, but not explaining why they work and the most optimal time to trade them. So you keep losing as a trader and blowing your accounts even though you are trying to learn and improve every day. In this video, I'm going to show you how to fix your trading problems and mistakes, along with sharing the simple 3 rules if you follow, you will see your trading improve instantly. Then I'll share real examples using the concepts I've taught so you can apply it in your own trading and see actual results. So in this video, we're going to be going over the scalping secrets professional traders know, but you don't. We're going to talk about why professional traders can make consistent money in the markets without trading all day. For myself personally, I only trade for the first 2 hours and then I can enjoy the rest of my day. So we're going to talk about exactly what I've learned to have the skill to only trade for 2 hours a day and then enjoy the rest of my day. For me to make consistent money in the markets, we're going to talk about the 3 simple step approach to profitable trading. We're going to talk about each of these steps in detail, and if you can get to step 3 and really master this step, then you will see much more consistency in your trading. But the problem is 90% of traders simply don't have the patience to actually implement these 3 steps. So if you're someone that's really serious about making money trading, let's go through these 3 simple steps. Once again, everything I talk about in this video came from 7+ years of trading experience, and in this video my main job is to summarize all of those lessons that I learned in terms of scalping that will help you reach profitability. And by the end of this video, when I show you those real examples, you'll understand why they work and therefore you'll be able to implement them in your own trading. So the first question I want to ask you is, would you take this trade? Now, if you watched my channel before, you know I trade the break and retest, and this is the 5-minute opening range retest setup. This is a setup a lot of you know. If you don't know how the 5-minute opening range retest works, make sure to click the playlist in the description and it will take you to the full free course on exactly how to use the 5-minute retest strategy. But with this being said, we can see the high of the 5-minute and we can see the low of the 5 minutes right here. We can see we got the breakout right here in the retest with strong price action. So based off of the information you know here, put in the comments down below, yes or no. Would you take this trade given the information you see on the chart? Well, based off the information on the chart, intraday, this would be a good scalping setup. However, we can see the result of this trade. Where we entered, we got an immediate rejection right off of that key level. We had our stop loss right at the break of the impulsive candle that was coming back up to that key level. And we can see we had a complete reversal from exactly where we took that trade. Now, why did this happen? And how can we potentially avoid this? This happened because you went into that trade and you are trading blind. If we were to look at this as a book, I only gave you 1 page of the book where there may be multiple pages and chapters. So you weren't able to understand exactly the full story, but you only knew what you were given based off of that 1 page. So with this being said, to become a better scalper, step 1, zoom out. Just because you're scalping does not mean you only trade a smaller time frame. A lot of scalpers will come in because they want these quick moves. They'll only focus in on the 1-minute time frame or the 5-minute time frame. But the reality is we need to understand the higher time frames to still give us enough confluence to enter the trade. Here in this example, we can see if we zoomed out on the 10-minute time frame on this same trade 2 days prior, we had a very strong rejection and a big impulsive move to the downside on this trade. And at the same time, on the higher time frame, we can see market structure is very bearish. We can see we had a high right here. We then had a lower high, another lower high right here, and where we actually entered was the 3rd lower high being put in. At the same time, we had a low. We are creating those lower lows as well. So it is very clear if we just zoomed out, we should have not gone long on that position. Even though the 5-minute retest was setting up, we didn't have the context behind that trade to actually take it based off of the higher time frame. Along with this, if we also just zoomed out from the 1-minute time frame to even potentially the 5 or 10-minute, we would have realized we had pre-market high right above the key level that we entered in on. So we were essentially buying a downtrend stock along with buying the stock while it was coming back up to resistance. Because of this, this was not a good quality trade by using the context of simply zooming out on your chart. So for step 1, we must combine timeframes. Now, to do this, we need to understand simple market structure, and we need to understand how to combine the timeframes to give us the best scalping trades. Here we can see I use the daily time frame, the 4-hour time frame, and the 1-hour time frame to create that thesis and to really combine the time frames. How would I use this? On this example, we have on the daily time frame a very strong push to the upside. This stock has been pushing to the upside for quite a while. We had a high right here. We are now breaking that high to the upside. And once again, we had that impulsive move on the daily time frame. And every single time frame is giving you the same information. However, every time frame, you're seeing a little bit more price action. So the way I like to see it is the daily time frame will give you that macro information. So overall, which way is the market going? And the lower the time frames get, that macro time frame will start going into that micro time frame. However, as long as all of those time frames are aligning and you can create a thesis using them, that trade that you take is going to be a really high quality setup. As we can see, when we go to the 4-hour, we see consolidation. And once again, if we zoom in over to the 1-hour time frame, we can see that consolidation. However, we see more candlesticks, and it just gives us a little bit more information in terms of now we know we need to break above this green line or this high for that move to the upside. And then because we trade the break and retest, we're simply waiting for the retest for that continuation move to the upside. And therefore, before the market opens, we now have a clear idea of exactly what we're looking for when we are going to take this as a potential scalp trade or a day trade. And as we can see, if we waited for the stock to break above the key level, which is 244.56, just like the previous example, and come back for the retest with strong price action, we enter in on the strong price action candle with our stop loss at a break of that previous pivot structure. This trade worked out extremely well to the upside and came all the way up to this 246.50 key level, which was a previous higher time frame level. And as you can see, you would have been done the day at 11 o'clock. The market opens at 9:30 a.m. Eastern in terms of the New York Stock Exchange. And if you were done at 11 a.m., you only had to trade for 1.5 hours and you would have been able to capture this A+ setup and go and enjoy the rest of your day. So for step 1, we always have to combine the higher time frames and understand market structure. If you don't understand market structure, I have a full in-depth video going over market structure, also in that playlist in the link in the description. But with this being said, what is step 2? For step 2, if you are someone that keeps losing good trades, you need to master this step. With this example here, we can once again see we had this high here, which was a pivot level. We got the breakout and then we got the strong retest. On this retest here, we can see we got strong price action right above the key level, showing that buyers are stepping up, and therefore this would be a good trade to take to the upside. Let's say we entered into this trade and this is a good A+ high quality trade. We know the higher time frame is within our favor as well, and unfortunately we end up losing this trade on this big red candle. Now, this big red candle comes in, we stop out of the trade because we have our stop loss at the break of this impulsive candle that broke above the key level, and now we just lost this trade. However, the problem was we did not wait for the candlestick to close. This is huge when it comes to my personal trading. I always wait for the candlestick to close below my stop loss to actually exit out of the trade. If we waited for that candlestick to close below our stop loss, you can see this candlestick came down. However, buyers brought it right back up, and this is symbolized within the wick right here. And this candlestick actually closed strong. It showed even more buyers stepping in. And if we simply waited for that candlestick to close, we we would have rode this move all the way back up to that 230 whole psychological number. So as a scalper, you have to wait for the candlesticks to close, because if we are trading within the first 1 hour or 2 hours, we are looking for a lot of volatility to be in and out of moves quickly. However, with volatility comes proper risk management, and we need to manage our risk and our trades. And for me, that always comes with candlestick closures. Now, a question you may have is, if we wait for candlestick closures, is your stop loss not going to be bigger sometimes if we actually end up waiting for that candlestick to close below the stop loss? And the answer is yes. Sometimes the candlestick may close a little bit more below your stop loss than you were anticipating. However, based on my personal data, and you can go back test this yourself as well, if you wait for candlestick closures, it will help you stay in trades much longer, and staying in those trades longer and capturing these moves, which have to be over a 2R multiple, meaning for every $100 of risk, you are making $200 of profit. Then because you are capturing these higher R multiple trades, you will still be more profitable in the long run, waiting for the candlesticks to close rather than stopping out on simple wick trades. And once again, if there's anything in this video that you don't understand, most likely I have already covered it in a video before, such as risk management, which is, once again, and I'm going to say this for the final time, in the playlist down below. So with this being said, for step 2, as a scalp trader, we have to wait for candlestick closures to not be shaken out of our trades and to actually capture these bigger moves. Now, before we get into step 3, this is going to be something I really want you guys to pay attention to, because 90% of the people watching this video, this is going to be the biggest cause of your downfall. If you want to see more consistency in your trading, this is what you're going to have to mitigate, and you have to learn this and apply it into your trading so you will actually see real success and consistent growth as a trader. And this downfall is being rewarded for bad behavior. A lot of traders get rewarded for bad behaviors because they are chasing money, but what they don't understand is, in that chase of money, they are simply going to fall off a cliff and lose the money in their account because they're focused on the money and not the process. So you're chasing monetary goals and not process focused goals, yet you are making money. So because you are being rewarded for your bad behavior, you think it's okay. Now, a lot of traders will tell you to have process focused goals, but they'll never tell you the process. They won't actually tell you what's the difference between chasing money and chasing process focused goals. So let's talk a little bit more in depth about this so you can actually have those actionable steps that you can follow to see more consistency. When you're chasing money, your entry model is not repeatable. For example, you guys know I trade the break and retest. I only trade the break and retest. There is no other setup that I trade. I trade the break and retest primarily. If you're in the accelerator where I live trade every single day, or if you're in Traders Lab, you understand I only trade the break and retest. This simply means every time the stock breaks out of a key resistance and retests that key level with strong price action, I enter into the trade. It's very simple. However, I get rewarded when that trade works in my favor. Now, as a new trader, the problem is you may have the break and retest. However, you trade breakout at the same time. You trade reversal trades. You trade anything that you think looks good on the chart. And because of that, let's say you trade primarily the break and retest. However, when you see a breakout occurring, you also will enter into the breakout because you think the chart looks good, should theoretically make money, and then you actually do end up making money. Well, now you're getting rewarded for breaking your rules and not entering with the same entry criteria. Because of this, yes, it feels good that you made money, but this wasn't a part of your rules. So long term, because you think it's okay to not follow your rules, you're only going to break them more. And once again, this is a reversal trade. We can see the stock is in much more consolidation. We have the high here, the low here, and then we got a bigger drop. If you were to enter this trade right here, this is more of a reversal trade than anything else. And because of this, this isn't the break and retest, this isn't a breakout, this is a completely different system. But because you made money on this reversal trade, all of a sudden you think that's okay. And now you're going to take reversal trades. However, you've never back tested how profitable reversal trades are. You've never back tested how profitable breakout trades are. So though you have this one system you back tested and you know it's profitable, you will still take these other setups that you've never back tested but because they make you money, you think it's okay. But in reality, the more you take these setups, the lower the chance of you seeing profitability because there's no systematic approach. So it is very important that you yourself differentiate trading and gambling. When you have one systematic approach, you have a clear setup and you have an edge in the markets. However, when you're gambling and you take anything that you think looks good, then you're only hurting your own chance of profitability in the long run. Because remember, if you go to the casino and you go to the roulette table and pick red or black, you have a 50-50% chance of doubling your money. However, there's no real edge, and long term, the casino is designed to win based off of their systematic edge. Therefore, for us as a trader, we need to have the edge in the markets and be designed like the casino and not the player in the casino. So for step 3, we need one simple approach. This approach needs to have a proven edge, a repeatable system, and most importantly, a simple entry criteria that we can enter every single time to make consistent profits from the market. Now, with this being said, let me show you some live trading examples that I took in real time with my actual thought process so you can see exactly how you can implement these 3 simple scalping steps in your own strategy and systems to actually become more profitable. And once I've done these examples, you'll have a much more clear idea of how to scalp profitably as a trader. So here we are on the first example. Now on the first example, like I said, first we need to understand what's going on the higher time frames. In this example, first we're using the 1 hour time frame, and all we're looking for is really what's the trend and how can we capture it. In this example, we can see we have a low right here. We then created a higher low. We also have the previous day high right here, and we created another high. So we can see that the stock is overall moving back to the upside. Once it came back and pulled back into this level, this is now the next higher low, and we are looking for continuation in the move back to the upside. So on the 1 hour time frame, it is very clear that we do want that continuation to the upside. However, we need to understand where we would actually enter in off of. For this, I would simply mark out this previous day high because the gray shaded area here is pre-market. So I would mark out this previous day high and I would mark out the previous day low, and I would use my previous day high and low strategy. If you don't know what the previous day high and low strategy is, it simply means once we break above this previous day high, we're looking for the retest and then we're looking for continuation back to the upside. So in this example, it is very clear on the higher time frame that this stock is trending to the upside. We have a clear indication of exactly where we should enter as well. Now let's see how we would actually enter this trade. So we have to move down to that lower time frame. In this example, I'm using the 1 minute time frame, and we can see pre-market we already broke above the previous day high, showing that this stock has a lot of relative strength, and this is a trade that we can potentially take. We can see exactly on the higher time frame what we kind of had for our thesis in terms of this line right here. We can get rid of that. All I would be looking for going into the market open is the retest back into this level, showing strong price action, waiting for the candlestick to close as in step 2, and then looking for that continuation move back to the upside using step 3, which is one simple repeatable system. So let's play out this trade and see exactly what happens. So as you can see here, we came back above. We're coming back for the retest. We got strong price action near this retest level, showing that buyers wanted to hold the stock above that previous day high. We would look for going long on this position here. Our target would be high of day, and our stop loss would simply be a candlestick closure below the low of day. This gives us a 2.6 risk to reward trade, meaning for every $100 of risk, we would be making $260. Let's enter into a buy position here and see exactly what happens. Once again, very important to wait for candlestick closures. This is key. For any example we look for, we wait for candlestick closures and we only trade the break and retest system. So as we can see here, we just got to high of day and we were done the day at 10 o'clock, which means we only traded on this specific day for 30 minutes and made $825. Now, like I said, I wanted to show you guys live trading. And for the next example, I will actually be showing you the voice live trading that I actually did in real time. However, for this example, I also took this trade live and had the full plan before the market opened. So if we can look here, February 5th, this is the exact same day. Friday, and coming into today after AMD earnings, the market's down a bit. My top watches were Nvidia previous day high retest, SPY, and QQQ. As we can see, this was sent in at 9:27 a.m. There's no editing behind it, and we can see at 9:25 a.m. this screenshot of exactly what I wanted to see. I wanted to see the previous day high break, the retest into that previous day high retest level, and then continuation to the upside. And once again at 9:41, keeping a close eye on the 122 Nvidia calls if we get strong price action near this key level, showing everyone in real time exactly what I was looking for the stock to do: a move to the upside, a little bit of a pullback, and then continuation into high of day. And then once I actually took the 122 Nvidia calls, I also made sure everyone knew. And always when I'm in a trade for the accelerator or traders lab, I make sure everyone knows exactly what's going on. Here we can see we had a 5-minute resistance, and we needed to break that 5-minute resistance for the actual break back up to high of day. And then here we can see that high of day push came in on Nvidia very nicely. And once again, that full thought process on exactly why I took Nvidia and the full game plan I had in real time. And we can see many traders got into Nvidia with exactly what my thought process was and what Nvidia did in real time. And this trade actually resulted in $5,200 in only 30 minutes of the market open. So once again, I say this to show you guys what I teach really does work, and I can apply it in real time because it is very simple. You don't have to be a genius. All you need is a little bit of patience and have the confidence within the system that I am trying to teach. And once again, I live trade in Traders Lab and the Accelerator. I am not an alert service, but I do this to show you the systems work, and they work in real time. With this being said, let's go look at one more live example to really solidify how you can become a profitable scalper. So before I show you the actual live trading example for this trade, I just want to show you guys the actual thesis behind it on the higher time frame so you understand step 1, and then we can go into step 2 and 3 within the actual live session. We can see Apple on the higher time frame had a really impulsive move back to the upside on the 1-hour time frame, and on top of that, we broke above this previous key structure, and because of this, Apple is now leaning towards that bullish side. So going to the day, I was expecting bullish price action. However, I was not going to enter in here because we could just chop around. So what was I looking for? I was looking for the stock to break this previous day high, make a move back above that, and retest either the previous day high for that move back to the upside, or if we even broke above that previous day high, make it a 5-minute high, and then retested that for a move to the upside, I would be interested in that as well. But I just wanted to make sure you understand on the higher time frame, we had a very clear signal that Apple was bullish for the day. So here we are right into the open of the day. We have 23 seconds before the market opens up at that 9:30 a.m. Eastern time. So here we can actually hear my thesis behind Apple and exactly why I would want to enter the stock. And then we'll see how I actually enter Apple based off of our 3 simple steps for scalping.
Yeah, coming into today, the names that I like, Apple on the higher time frame, just above pre-market high looks pretty good as well on the higher time frame. Now we'll see the reaction above that pre-market high and previous day high. If it can get above and retest that 232 level, I think Apple could potentially have a good move. But once again, we'll see how that price action is.
So once again, we can see Apple is near that pre-market high. I already showed you on the higher time frame that as long as it was above previous day high, it looked good. So now what we're going to be looking for is either that pre-market high retest or the 5-minute retest, just like the strategies that I do explain to you guys on this channel. So let's see how I actually ended up entering this trade and the exact thought process behind it.
Apple kind of held that 1-minute opening range so far. Though I'd like it to come back into that previous day high, that would be still the best level in my opinion. We'll see what happens with this Q's drop here. Q's a little bit of a bounce, Apple back a high of day. So now the next thing we can look for, like I said, is the 5-minute opening range. So if Apple was to continue to this kind of relative strength, we don't need it to pull back into previous day high as long as it continues to make new high of day. And the next level we can look at is basically just mark out the first 5-minute opening range.
So in this example here, we can see Apple broke above that previous day high, showed a lot of strength. And now if we count it out, 1, 2, 3, 4, 5, we have the 5-minute range high right here. So what I was explaining was because Apple has a lot of relative strength, we now want to see simply the push up on Apple and the retest of the 5-minute opening range for a move back to the upside. So let's see if Apple gives us that 5-minute opening range retest and we can enter into this high quality trade.
Yeah, Apple. Let's look for the. I'm going to be looking for the 235s myself.
So right here, we can see we had that 5-minute range retest. We now marked that out. We are coming back for that retest now as well. Like I explained, so there's no confusion. I'm looking for the 235 calls on Apple for a move back to the upside. Now let's see what the price action actually did near this key level.
Apple looks a little bit better here, with Q's kind of pushing back 235, whatever, 54 is the previous highs. Want to see that, then 236, then 237.98, which is the previous high of day from like 2-3 days ago. And then Q's here, right? You want to see this break of this pivot structure, which is 513.08.
So here you can see I got into Apple on this retest with strong price action. Now I'm simply looking for high of day, and then we're looking for continuation on this name.
Yep, here's Apple back at high of day. Now we'd like to see this high of day break if we can. And that push up to 236, but so far, nice little push back up on high of day on Apple.
So you can see here is the first profit target on Apple, which is this high of day push. I took my first profit targets here on Apple at high of day, and now I'm simply waiting for continuation throughout the day.
Keep an eye out on your Apple as well. Really just want that push back up to 238. That's going to be the key level for me now.
So you can see I took some off at high of day on Apple, and then I really just wanted that push back into this yellow shaded area or above to 238. And if we end up playing out the day, we can see where we entered, where we took our scales, and then you can see that continuation play with Apple hitting that 238 whole psychological number, just like I was talking about within the live trading in real time as this trade was developing. And for me, this was a $7,000 trade on Apple by using the same systematic approach and the 3-step simple system for scalping. So if you got value out of this video, make sure to leave it a like. If you have any questions, put them in the comments down below. Thank you for 200,000 subscribers. It's absolutely insane. I hope these videos are providing you value. If you haven't, make sure to subscribe, and I'll see you guys next week with a brand new video.